The CPI report drops. What is the market telling us? What's up, super investors? Welcome to the Nick Rutherford report. Every investor is going to lose money, and that's okay. A super investor just loses less than they make, and they do it by watching the market. So hit that like button, subscribe to this channel, share this with someone who gets a lot out of it, because this is the place to be for the financial news that matters for your net worth. Let's get to it. The CPI just came out, and if we look at the report, it has risen 2.9% for the last 12 months ending in December. So this is very interesting, and I want to zoom into a few important things because it paints one picture, but when you look under the hood, it's very interesting. See, just going down here, looking at this, it seems to me like there is a massive amount of inflation in the services less the energy sector. This means services. Now, we've got medical care services, transportation services, shelter services. All the services are really at a high level of inflation. I would consider that, compared to at least before what was happening in the plague. And I think there's one reason for that. Well, there's an embedded inflation problem. It's some sort of level. And we can't import services. We might be able to import all these different widgets from other countries, but the services, that is an extremely concerning thing. And you can see that up here, fuel oil really weighed down on the index. So that is kind of like an outlier. I don't know about you, but I just renewed my health insurance and it was up dramatically, somewhere between 15-ish%, almost as high as 20%, I think, somewhere around there. I don't have the number off the top of my head, but it was a significant bump. And if anyone thinks inflation is dead, maybe they haven't been out buying things. So my point in looking at all of this is that Wall Street trades off of this number. It's at 2.9. It's not crazy. It's ticked up a little bit. We'll really have to see how this shakes out. But there are some really concerning stats that I think investors need to pay attention to. So here is this graph. Let me see if it's coming through well on the video for everyone. Looks pretty good. So here we have the CPI, and we have a chart that has been matched up to the CPI, so showing the money supply expansion as M2. That's this reddish line here, and it's bouncing up. And whoever made this chart is claiming that it lags, the CPI lags the money supply by 16 months, which gives us a good indication, if true, that the CPI is going to rise sharply. They predict up to 3.7%. If this happens, we're going to have all sorts of problems. So we're really going to have to see if this develops into a trend or if this is just a bunch of nonsense, because super investors know that investing in the trend, a durable trend, is what makes money, or if you're in the wrong trend, it's what destroys wealth. So these are some things that we have to pay attention to. And that's really what I'm getting from the CPI report right now. Now, I want to move over to some of the trends that I've seen that are intact and evidence that they're still intact. So we've been operating under the assumption that Bitcoin go up. Very simple. Now, that's just based on the fact that there's a limited supply, there's halving events, and then there's more of a limited supply, and people go a bit crazy for it. Now, Italy's largest bank makes its first Bitcoin purchase in $1 million test. Why is this so interesting? It's very interesting because if banks start buying Bitcoin and more companies start buying it and more people who have tons and tons of money start buying it, well, as long as the supply stays limited, which in theory it will, the price should go up. Now, of course, I study the past to predict the future, and every time we have a cycle, Bitcoin tends to have a big, large crash or correction, whatever word you want to use. So I don't really expect this time to be any different, unless, of course, banks just keep scooping it up and more people add to it. But what I like to do is look at this, because this tells me the trend is intact. And a super investor knows that if the trend is really working, well, that's the place to make money. So I just point that out. So the next thing that I want to point out is I'm seeing articles like this. What to know about Trump's proposed external revenue service. I think the biggest risk, the absolute biggest risk everyone has in the market is what happens with government spending. And I'm going to show you a chart in just a second of why this is so important. Because if the new administration comes in and there's a big change in the way government is spending, well, that's going to change the markets dramatically. So this is almost like a tail risk that I see appearing somewhere in the next month. We're really going to have to keep a close eye on this and see what happens, because there are some big promises floating around, and if they come to happen, or if they come to be, well, we could have dramatic changes, and that's for one simple reason. Someone else's spending is someone else's income. So if the government is spending, that's someone else's income. And so goes the economy, because one person's spending is another income, and then they spend, and it creates a cycle of wealth. So if there's a dramatic shift in the spending, it could lead to a dramatic shift in the economy and in corporate profits, which could have huge implications. So I'm watching this very closely. It's not time that I'm freaking out. I'm just watching it closely, and the market's going to tell me what to do, because it could be bluster. It could be something serious. Now, why do I say this is so important? Because if you look at this chart that I've got from George Robertson on Twitter, he's just showing me the government spending is directly correlating to GDP. So you can see from this chart, I'll check the recording here to make sure it's coming up. You can see that the fiscal spending from the government is really leading towards the GDP being just massive. So this is why I believe that everyone who calls for a recession, there is no possibility of a recession today. If the data changes and the circumstances change tomorrow, we could have a recession tomorrow. And that's why I'm open-minded. But until then, I'm just watching the data. And that's what every super investor should do. They should watch the data, because it's going to give them an edge. And right now, all of the spending is putting GDP up massively. And here's the chart to prove it. Now, we don't have to look any further than the earnings of companies, and they're starting to report right now. And if you look at this, we've just had JP Morgan, Wells Fargo, Goldman Sachs, and BlackRock come out and report earnings, among many others. You can see that we'll just use JP Morgan as an example, because it's one of the biggest, most powerful banks. So all the analysts thought they were going to earn $4 per share, and they come in and they earn $4.80. That's a massive, massive beat. So, the banking sector right there, they're making lots of money. It's just an incredible amount of money. Look at the earnings on Goldman Sachs. They were expected to make $8, and they made almost $12, a 50% surprise to the upside. And let's go over to the market. Well, looking at the market, let's look at the chart. Well, here's Goldman Sachs. It's up 50% in the one last year. If I look at it over the last longer time, we're hitting all-time highs. And this tells me that the market thinks things are good. The data looks good. So that's my position. Everything's good until it isn't. It's very interesting. And I want to point out, just in the theme of using the market to tell me what to do, we are in a raging mania. Why are we in a raging mania? It's very clear. You don't have to look any further than XRP. I thought the mania could be over, because if you look at XRP here, it took a dramatic downturn, but now it's turned up. And if you look at the last few times we've had some crazy manias, back in 2021, right here, it spiked. If you look at back in 2018, during that crypto cycle, it spiked. So we are in the mania part of the cycle. So this means investors can make lots of money, and at some point they can lose lots of money. So now is the time to pay extremely, extremely close attention. Here's one of my leading indicators. How's the crypto market doing? Because it's the most speculative. And right now it's turned back up. Just look at XRP. It's almost silly. Now, I'm just saying that as a signal. I'm not saying rush out and buy XRP. I'm not saying sell XRP. All I'm saying is we can use it as a proxy for investors' risk tolerance, because a super investor is trading off of everyone else's perceptions. And right now, it's very clear that they're bullish, it's in a mania, and the mania is continuing. So until that changes, I'm not going to change my position. But we have to watch the data closely, because when everything shifts, investors will lose lots of money. We have big market events coming up soon. The new administration is coming in. This could change things massively. So hit that like button, subscribe to this channel, pay attention for what comes next, because you don't want to be on the other side of this when things switch it up. Next, what's the number one stock to buy right now? Click on my bio, follow me, and follow the link to RutherfordWealthReport.com, and I'll share my latest research with you.